For the purposes of this class, trading will be defined as a completed transaction in a time frame less than 6 months, and definitely no longer than 1 year. The bulk of examples and explanations will focus on trades lasting from 1 week to 2 months. It is difficult to explain fibs for trading because there are so many different types of instruments to trade, from stocks to currencies to commodities and more. In addition, everyone has their own preferred time frames and methods. However, there are a few general characteristics we can divide trading into. These are reversals, continuations, and breakouts. To keep things simple, explanations and examples will be from a bullish perspective, profiting from upward price movement, though keep in mind these principles are also appropriate and relevant in the reverse for trading with a bearish stance to profit from downward price movement. For planning and making trading decisions, we will look at the entry, risk management, and exit elements of a trade. For risk tolerance and profit goals, we will look at conservative and aggressive strategies. The abbreviations of H, L, and M will be used to illustrate various strategies that can be taken depending on risk tolerance and objectives. H represents high price, L represents low prices, M represents medium prices. The word early will mean a buy or sell order is executed as soon as the chart reaches a predetermined price. The word late means a buy or sell order is executed after the chart has passed a predetermined price.